Do you want to generate weekly passive income? Imagine having a strategy that allows you to earn consistently, week after week. That's the power of options trading. It's not just for Wall Street bigwigs, but for anyone who's willing to learn and apply a proven method. This video will guide you through an options strategy that can potentially turn your financial life around. So, are you ready to take a step towards financial independence? Stay tuned to master this options strategy and start your journey towards weekly passive income. Before diving into the strategy, it's crucial to understand what options are. Options are financial instruments that derive their value from an underlying asset. They give buyers the right, but not the obligation, to buy or sell the underlying asset at a predetermined price, known as the strike price, on or before a specific date, the expiry date. There are two types of options: call options and put options. A call option gives the holder the right to buy an asset at a specific price within a specific period. On the flip side, a put option gives the holder the right to sell an asset at a specific price within a specific period. Now let's talk about premium. This is the price you pay to buy an option. Think of it as the cost of potential opportunity. The premium is determined by various factors, including the underlying asset price, the strike price, the time remaining until expiration, and volatility. To sum it up, buying a call option means you expect the price of the asset to rise before the expiry date, whereas buying a put option means you expect it to fall. The premium, the price you pay for this right, is the risk you take. Now that we've covered the basics of options, we're ready to delve into the strategy. Scene script. Introducing the weekly options strategy for passive income. This strategy is all about selling options every week, hence the name. It's an approach that can generate consistent income when done right. But how exactly does it work? Well, it's simpler than you might think. First, you need to find a stable stock. It's not about finding the next big thing or a stock that's going to skyrocket overnight. For this strategy, consistency is key. We're looking for stocks that are steady and predictable in their movements. Once you've found your stable stock, the next step is to sell a call option. This means you're giving someone else the right to buy that stock from you at a certain price within a certain time frame. In return, you receive a premium. Now the beauty of this strategy lies in the weekly time frame. By selling options every week, you're consistently generating income from the premiums. And because you're dealing with stable stocks, the risk of the stock price skyrocketing beyond your strike price is relatively low. What happens if the stock price does go above your strike price? Well, you'll have to sell the stock at the strike price. But remember, you've chosen a stable stock, so the chances of a major price increase are minimized. And even if you do have to sell, the income from the premiums often offsets any potential loss. On the other hand, if the stock price stays below your strike price, you keep the stock and the premium. Then you rinse and repeat, selling another option the following week and the week after that, and so on. This strategy is not a get-rich-quick scheme. It's a consistent, steady approach to generating income. It requires patience and discipline. But when done right, it can be a powerful tool for building long-term wealth. So, that's the strategy in a nutshell. But how can you implement it? Let's find out. Implementing this strategy involves a few crucial steps. Now let's dive right into the nitty-gritty of how you can put this weekly options strategy into action. The first step is selecting the right stock. A common misconception is that any stock will do. However, it's important to choose a stock that has high liquidity. This ensures that there are enough buyers and sellers in the market, making it easier for you to open and close positions. A good tip is to go for blue-chip stocks, as they tend to have high trading volumes. Next, we move on to deciding the strike price. This is the price at which you agree to buy or sell the stock in the future. Now, this is where your market analysis skills come into play. You need to predict whether the stock price will go up or down. If you believe the price will rise, you choose a strike price higher than the current market price. Conversely, if you believe the price will fall, you choose a strike price lower than the current market price. The third step is setting the expiry date. In our case, since we're focusing on a weekly strategy, the expiry date will be 1 week from when you open the position. But remember, the shorter the time frame, the higher the risk. So, ensure you're comfortable with this level of risk before proceeding. Finally, it's time to place the trade. You can do this through an online broker. Make sure to double-check all the details before clicking that confirm button. A single mistake can make a significant difference in your trading outcome. So, to recap, we've discussed the steps required to implement this strategy. Selecting the right stock, deciding the strike price, setting the expiry date, and placing the trade. Remember, trading options is not a guaranteed way to make money. It requires a solid understanding of the market, patience, and a willingness to learn. By following these steps, you can start generating weekly income through this options strategy. Like any investment strategy, this one also comes with its share of risks and rewards. As we dive into the world of weekly options, it's crucial to remember that while the rewards can be high, the risks can also be significant. Let's start with the risks. The primary risk involves the potential for substantial loss. The value of an option can decrease rapidly, possibly to zero, leaving you with a total loss of your initial investment. This can occur if the market moves against your position. Remember, in the world of options trading, market volatility is a double-edged sword. It can bring profits, but it can also cause losses. Another risk is the possibility of early assignment. If the option you sold gets assigned, you are obligated to fulfill the contract, which could result in a significant loss. Now let's talk about the rewards. The most apparent reward is the potential for significant profits. Selling options can generate income on a weekly basis, providing a steady stream of revenue. This strategy can turn the market's volatility into an advantage, allowing you to profit from price fluctuations. Furthermore, this strategy provides a measure of control. You choose which options to sell, when to sell them, and at what price. This control allows you to tailor your strategy to your financial goals and risk tolerance. However, it's essential to manage these risks effectively. This includes not investing more than you can afford to lose and diversifying your portfolio to spread the risk. Additionally, continuously educating yourself about the market and this strategy will help you make better decisions. Remember, the goal is not to win every trade, but to have a strategy that provides consistent profits over time. By understanding the risks and rewards, you can adjust your approach to meet these challenges head-on. In conclusion, while the world of weekly options can be a profitable one, it's not without its risks. But with a well-planned strategy and a good understanding of the market, these risks can be managed. Understanding the risks and rewards will help you make informed decisions and maximize your profits. There you have it, a simple yet effective strategy to generate weekly passive income. We've journeyed through the world of options, demystifying its complexities and revealing its potential for those willing to take calculated risks. We've unveiled the weekly option strategy, a game changer that can transform your financial landscape, bringing you closer to your financial dreams. We dove deep into how to implement this strategy, breaking down each step with the precision of a seasoned trader, ensuring that you are fully equipped to venture into the world of options. We explored the various elements involved, from choosing the right stock to leveraging the power of time decay, and how these pieces fit together like a well-oiled machine to generate weekly income. But like all investments, options trading is not without its risks. We've highlighted these potential pitfalls, showing you how to navigate this terrain with an informed and strategic approach. We emphasize the importance of risk management, of understanding the potential rewards and the possible losses, and of being prepared for all eventualities. Now, it's over to you. It's time to take these insights and put them into action. Start small, learn from your experiences, and gradually build your way up. Remember, the world of options trading is not a get-rich-quick scheme. It requires patience, persistence, and a keen understanding of the market dynamics. As you embark on this journey, remember to stay grounded, keep your emotions in check, and don't let the fear of loss or the excitement of potential gain cloud your judgment. Stay focused on the strategy, adjust as necessary, and keep learning. This strategy can be your stepping stone to a more secure financial future. A tool that can help you build a stream of passive income that can supplement your earnings, or even become your main source of income. It's a powerful tool, but like all tools, its effectiveness lies in how well you use it. Remember, the journey to financial freedom begins with a single step. So why not take that step today? Thank you for watching.